What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for MicroStrategy Incorporated with the ticker symbol MSTR. I will first be going over what I see in the daily chart and finish the video off with the weekly chart. This video is for entertainment purposes only. Please trade at your own risk. So my goal for today is to show you guys what the market participants are doing and where they're most likely going to take the price to next. Well, it looks like there's a lot of aggressive sellers in the market. There's a lot of aggressive selling pressure. Price has not been able to move up higher as much as expected. We did see a bounce on the regular scale chart at the measurement target around 244, but that could just be a temporary stopping point. Price is still below this downward trend line right here. As long as we're still below the downward trend line, then it's bearish. So again, we're still below the downward trend line. We have not seen price back above the 311 level, which was prior support. And again, looks like Bitcoin is also looking very weak as well. Looks like we're going to be targeting, it still looks like it wants to drop down lower. So I'm looking, it looks like it wants to target the $79,000 level and maybe the $71,000 level, which was the breakout last year. I think it was this year or last year. Either way, there was a range pattern. It was consolidating for several months and then broke out of the $71,000 level. And it looks like it's coming back down to potentially test it. So looking for 79,000 for Bitcoin and potentially even 71 because it just does not look like it wants to bounce right now. And generally, MicroStrategy should be like more of a sensitive indicator to market fluctuations for Bitcoin. So just like over here, it was a leading indicator. It topped early and then Bitcoin topped later. So I'm expecting this to bottom out early and then rally and then Bitcoin to also follow as well. Not because Bitcoin follows MicroStrategy or strategy, is because this is more sensitive to market participation levels. It's a good like indicator for that. So if we have aggressive buyers, they're probably going to want to step into the more exhausted type of asset class. So if this is super exhausted to the lows, there's a good chance we start seeing aggressive buying for MicroStrategy before we see it for Bitcoin. That's what you generally want to see. You want to see Bitcoin taken off and MicroStrategy continue to dump down lower. As right now, it's still following Bitcoin, so that's a good sign, or even leading it because this is still looking pretty weak and Bitcoin is also dropping. You don't want to see a decoupling between the two. You don't want to see Bitcoin rallying and MicroStrategy dropping. So as right now, we're not seeing that. So as right now, if it wants to continue trending on lower, we can look for other price targets on the logs chart. So if you look at on the log scale, what we can do is look at a measured leg in this magnitude right here. This is all one large drop right here. And then if you drag this over, this is right around the 212 level. So again, if we're going to see the lower $200 level, be prepared for that because that's what it looks like the chart is potentially setting up to do. Let me take a look at this downward sloping channel. So we have this downward sloping channel right here. And again, it's making lower lows or highs. It looks like it's targeting the opposite side of the channel. This is also the right where the measure move target is. One leg down right here, second leg down. And just like over here, price bounced. There's a good chance we see a bounce here on this support side of the channel. So as right now, it's ready in the 240s. I'm expecting it to probably get below 240 very soon, probably if not today, and potentially drop down to lower 200s. Again, it's just not that strong as of right now. So it still looks bearish. Bitcoin still looks bearish. But again, I believe this is also all just temporary as of right now. And to answer some questions people left over in my last video, why don't I use this indicator? Why don't I use that indicator? Why don't I use RSI, volume, MACD, VWAP? I don't know what else is out there at this point. EMA crossing each other, the 50, the 200. Well, look, I learned this kind of later in my experience career. There's 1,000 different indicators out there, and basically they're all free. So what edge in the marketplace would that give you if everyone can use it? And basically no edge. You have to learn how to read the price chart. The price chart will show you what the market participants are doing. So that's main priority number one. You remove all indicators and you just try to understand what's going on in the price bars and the structure. So this is making lower lows and lower highs. See that? The structure is weak. So there's a good chance it continues until it reaches a point where it can't, which is possibly the measurement target or the lower side of the range. So that structure could terminate here. It's not guaranteed, but it could. And then another thing you could think about is so like I said before, there's so many different indicators, so many different strategies, so many different ways of reading a price chart. the thing is, like, use what allows you to get the sense of the market the best, right? So it might not be what I use to get a sense of the market, because if you can read the price chart better using other tools, then use those tools. So you pick what's best for you. I don't want to use those other tools because I believe they don't do anything and I don't like it. So that's why I don't use those tools. They're available for other people to use, but I don't like it. I don't think it does anything. I don't think it's necessary. And you don't want to overcomplicate this. You can obviously throw, I can throw 20 indicators on this chart right now, but what is that going to do for me, right? I'm just overcomplicating this. Keep it simple. You can always keep on adding more data, more data. Oh, let me just start looking at the fundamentals too at this point. Let me look at the earnings report. Let me look at every single piece of data. We can't do that. That's not the point of technical analysis. It's just to look at the current market structure and the price action, which is the near term stuff. So again, that's what we're looking at. We're looking at the market structure, which is a downtrend currently in play, and look at the price action, which means that the bulls are not trying to push up the price. It's the bears are still taking control of the market and they're driving down the price. So you keep it simple, as simple as possible. Don't overcomplicate it, because you can definitely throw 20, 30, 40, 50 indicators on the chart. But is that going to help you read the chart better? Probably not. It's just going to confuse you. You're going to see conflicting information. So you don't want to do that. So you just keep it simple. Find what tools are best for you. And then another question was like, what is a cycle? Well, again, in life itself, we have cycles, right? We have life and death. So, someone's born, they die, and then someone's born, they die. We have different cycles, right? And they can last about 80 years, or even like, let's say a generation is about 25 to 30 years. So that's another generation, another generation. So these are cycles. Same thing for, like a forest, right? It's born, there's a forest fire, all the bad, dead debris die off, is born again, and then, it's just like a cycle, right? Your heart beats like a cycle. It goes up, and then it goes, pumps in air, pumps blood throughout your body. It doesn't move in like a beat like this, ding, 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 ding. No, it goes like, like a beat, right? Like that. Or like you see it on that machine, it goes like this, something like that. So everything is cycles. Even the marketplace has cycles. So what does that mean? It means that, sometimes you'll see a bull market for a couple of months, and then you'll see like a bear market for a month or two. And then you'll see a bull market for a couple of months, then you'll see a bear market for a month or two. Just like over here. So we saw this bull market right here, and then we saw a correction take place for several months. We saw a bull market right here, and then we saw a correction take place for a couple of months. And let's go and measure that previous bull market. So from the low, let's say it started right here. This is the lowest point to the highest point was about 64 days or 45 bars. Now let's take a look at this one. This is probably the lowest point right here. You could even measure this one, but let's just measure this one. It looks to be more accurate. About 76 days. So a little bit longer. And then let's take a look at this correction from this top to the same point in time was 163 days. And now from here to 163 days, that would mean price would bottom out right around May. Again, it probably won't take that long, because as a trend develops, it's going to get more and more exponential, especially this type of stock. So I don't think it's going to take that long. But again, it has, taken, several months to correct before it bottomed. Same thing for Bitcoin. About every 4 years, you see a top. So if we have a top in Bitcoin price, it'll be another 4 years from that previous point to get the next top. And this has happened already a couple times. So that's why people keep on saying it's going to be topping this year in 2025, because the last time it happened was around the same time, late 2021. So again, that was a 4-year cycle. Same thing for the lows. Wherever Bitcoin bottomed in this bear market, 4 years later, it did it again. It did it again. So again, there's cycles in the market. There's smaller term cycles. Again, I'm just starting to scratch the surface on that. But again, you can even go more granular. Like you can measure these small little cycles, maybe even intraday. But either way, the cycles throughout life and the marketplace. Last one I want to answer is quantum computing. What is that going to do for Bitcoin? Is it going to hack Bitcoin? I think it's overblown. And Bitcoin, the thing about Bitcoin is that it's very adaptable. So it's not stuck on the protocol that is currently running. It's not capped at anything. I mean, 21 million is capped, but if more people agree to change it and they start using that different type of Bitcoin or a fork of it, then that's the new Bitcoin that we use, right? So same thing with an update to defeat quantum computing so it doesn't crack your private keys. You don't have to do a hard fork. Maybe you do, like, I think it was a soft fork instead, or maybe just a little update, because they have done that before. Different addresses for Bitcoin have existed previously that we are currently using a different type of address. So again, this updates that go out, and then it's just what the nodes want to run, and then that's what they say is what we use. So again, if the quantum computing comes out, then Bitcoin will be able to adapt in time, because you don't want to lose your Bitcoin. So you're going to upgrade or update to have quantum resistant private keys. That's just what's going to happen. If quantum computing comes out, it's going to take your bank account first. It's going to take your credit card. It's going to take all your private information first. And the last thing standing would be Bitcoin. So why would you be afraid of Bitcoin getting hacked when everything else is way more fragile to get hacked? I mean, it's just, you got to think about that as well. Bitcoin, to hack that, it's never been hacked, and it just gets stronger and stronger as time goes on. It gets harder and harder to hack it as time goes on. So again, just to answer those questions and referring back to this chart right here. I went over the daily chart. We can expect to see lower 200s if we don't see a reversal take place. Not the end of the world. And then we can draw some trend lines again. So again, we're still above this trend line right here. And again, looks like this trend line was in play. You take this one, or still technically above this trend line right here. But you can also adjust it. If you keep it at the close of the candle, if you keep it out maybe this candle, these swings right here, something like that, this is right around, the 220. So it does make sense. So it looks like we haven't even set a third angle yet. This tells me this is still pretty early for this type of market. Let's take a look at this trend angle right here. So from here to here, that was about 70 degrees. And let's take a look at this one near the top of the market. This was about 76. But generally, we should probably be seeing more than that. So overall, it's still just correcting much lower as of right now. And that's all I have for MicroStrategy. I'll give you guys an update tomorrow. This is Vee Trades, and thank you for your time.